According to a Pan-African asset manager and investment bank, Imara, equity investments in many African stock markets in the early weeks of 2013 have been dominated by foreigners. For more on this trend, we're joined on the line by John Lagat, manager of Imara African Opportunities Fund. Thanks for joining us, John. And I know that your fund, I suppose, is one of the funds that is investing in these African markets. But talk to us about the trend that we have seen where foreigners are more and more coming back and finding opportunities in the African continent. Where are these foreigners coming from? I mean, typically, what type of investors are these?
Typically speaking, we're seeing substantial flows now coming from Europe and the United States, but also now South African institutional pension funds are moving into Africa. So the growth, generally speaking, from Europe of new frontier funds being established is clearly benefiting Africa.
So, I mean, as you say, new funds being established specifically focusing on Africa right now or frontier markets. I mean, what is the general thinking out there when it comes to getting exposure to frontier markets as they generally are in Africa?
Well, they're all quite small, so the kind of levels of funding we're talking about is small in the global scheme of things. But over the last sort of 4 or 5 years, we've seen a general shift in developed market fund flows towards emerging markets, and of course frontier markets are just on the edge of that. And clearly at the margin, with small trading volumes in African stock markets, that makes a big difference.
So how would you see that going forward? Because that is always going to be the impediment to Africa until that improves, is the volume issue, the liquidity issue. Are there improvements that you're seeing right now? Do you see certain markets where volumes are starting to tick up?
I think at the end of 2011, volumes probably hit a low. Certainly in the previous sort of 3 years or so. And generally through 2012, volumes increased fairly substantially. For example, Nigeria probably hit a low of about $8 million a day in December 2011. Now you're talking about $30 to $40 million a day. So it's a big increase.
Certainly is a substantial.
The liquidity is improving.
I mean, what about valuations right now? If you're talking about markets like Nigeria, we know the banks are still cheap, but if you look at breweries in Nigeria, if you look at consumer-related stocks, many of them are said to be fetching pricey or trading at pricey premiums. And then you've also got Kenyan blue chips, which have seen a lot of interest. Are these markets still considered cheap? I mean, how would you rate them right now?
No, I think in December 2011, they were clearly very cheap. And in fact, you had a lot of companies where the dividend yield was greater than the PE. You know, now that's reversed, and you mentioned the consumer stocks in Nigeria. The same could be said about Kenya. But then, you know, if you're one of the multinationals who typically own these businesses, they're looking out at 20 years and looking at very long-term growth in these sort of countries. So it may look expensive in the short term, but obviously if you're taking a 10 or 20 year view, they still offer good value.
So they're still looking at, I suppose, the low base in Africa and taking a position as a long-term hold as it stands right now, John.
I think mainly long-term holders, yes. Back in 2007 and 2008, which was the last big bull run we saw in Africa, a lot of that was hedge funds, particularly from the United States, and of course they're here today and gone tomorrow. Whereas I think the funding now is much more long-term in terms of frontier as well as African funds. Did
you see this trend continuing as it started this year? Because it started ticking up even last year, and I suppose it's just people have a little bit more risk appetite also this year. Do you think that foreigners will continue to put money into African stock markets? Which ones do you think will continue to build on the momentum we've seen this year?
I think in the first instance, the markets really started to move in December and January, which is possibly asset allocation shifts that have taken place. I would expect some sort of a pullback in the next few months before resumption again. I think when you're looking at some of the smaller countries in Africa that haven't had the sort of gains that you've seen in Nigeria and Kenya, I think you've got opportunity there. So Zimbabwe, Zambia, Botswana would be examples.
And of course, just before you go, Zimbabwe, the market where we're speaking to you from, what was your view right now on the risk premium attached to Zimbabwean stocks?
Well, I think there's been a significant risk premium attached to Zimbabwe as a country. and that reverberates through all asset markets, whether it's property or equity. And I think as the unity government has progressed with its economic reforms and now political reforms in terms of a new constitution being agreed, going to referendum next month, I think the risk premium is now beginning to fall. And that will continue, and hopefully if the election goes smoothly, which we all hope, then you will see a further fall in risk premium as well.